students, today let us look into the basic of accountancy under accounting equation approach. The double entry system means it is a system under which each and every transaction has two effects, both to be debited and credited. Under accounting equation there is a formula capital plus liability equal to assets. And then there is an expanded equation is assets equal to capital plus liability plus revenue minus expenditures. Under this system, account is to be classified into 5 categories. The first one is asset, and then liabilities, capital, revenue and expenses. There is a very short method which is to be debited and which is to be credited. We can know from this table. For example, asset. If asset increases, it is to be debited. For example, if you purchase a machine, the machinery account is to be debited because the asset has been increased. And then in the case of asset is decreased, if we dispose, if we sell one asset, then it's to be credited because decrease in asset. Likewise, expenses increases, it is to be debited. Expenses decreases, it is to be credited. Likewise, the capital, revenue, expenses, all the three, if it is increases, for example, capital increases, it is to be credited. Revenue increases, it is to be credited. Expenses increases, it is to be credited. And then capital decreases, it is to be debited. Revenue decreases, it is to be debited. Expenses decreases, is to be debited. Please remember, please bear in mind that this table, it will be more useful in generalizing the transactions. Understand? Explanation on equation method. The first case, increase in capital and increase in asset. If anybody commenced a business with cash rupees 1 lakh, that means there are two effects. One is cash and capital. Cash increase in asset, capital is also increase in capital. According to the formula, what we have seen already, so increase in cash is to be debited, increase in capital is also to be debited. So what is the equation? Assets equal to capital plus liability. Asset, cash is an asset. So how much cash increased? 1 lakh. Capital is a liability. How much capital increased? 1 lakh. So 1 lakh rupees plus 1 lakh plus 1 lakh. Or one debit and then one credit. Both are equal. In this case, decrease in liability and decrease in asset. For example, we paid creditors to the extent of rupees 10,000 rupees. We paid. If we pay, what will be the effect? Actually, cash goes out and creditors are paid. That means the cash goes out means decrease in asset because cash is an asset. So the value of asset, that means cash, is decreased. And then the creditors are paid. That means the liability has been decreased. So decrease in liability. What is the equation? Assets equal to liabilities plus capital. Cash is an asset. Creditor is a liability. Now cash has been reduced by rupees 10,000, whereas the creditors also has been reduced by 10,000 rupees. So it is a equal method. In this case, decrease in one asset and increase in another asset. Bought furniture costing rupees 5,000. We are purchasing a furniture to the extent of rupees 5,000 rupees. Both are assets. Furniture asset, cash also asset. So furniture also increased, but cash decreased. Our cash balance will be decreased. So increase in asset is to be debited. Increase in asset and then decrease in asset. So cash is to be deducted and then furniture 5,000 is to be added. So minus 5,000 plus 5,000 equal to capital plus liability. There is no change. The figure, it was already, the same figure will continue. But here the internal adjustments will be between cash and furniture. Understand? In this case, accepted a bill drawn by the creditors rupees 20,000. What will be the effect? Bills payable is a liability. Creditors is also a liability. Bills payable means if you pay bill that you have to pay in the future period. That is increase in liability. Whereas reduction in creditors. For example, if you pay the creditors, the creditor amount will be reduced. So decrease in liability. So bills payable is increase in liability and then creditors is decrease in liability. What are the equation? Equation method, assets equal to liabilities. Assets, there will be no effect in the assets. But inter adjustments will be there between bills payable and creditors. So bills payable, that is a liability increased to plus 10,000 and then the same liability, that is creditors amount, has been reduced by rupees 10,000. So plus 10,000 minus 10,000 is transactions affecting more than two accounts. For example, goods costing rupees 30,000 sold for rupees 40,000. So the cost of the goods is 30,000, but we sold at 40,000. That means there is a profit 40,000. So there will be three effects. The first effect is goods go out. Goods means stock. Stock is going out. That means stock is nothing but an asset. So decrease in asset. And then cash comes in. How much cash coming? Actually 40,000 is coming inside. So cash comes in. That means increase in asset. And then goods sold at a profit. Actual cost 30,000, but we sold at 40,000. So there is a profit 10,000. So any profit or any expenses are to be added to the capital account. So what is the equation? Assets equal to capital plus liability. Here both, cash and stock are assets. In cash 40,000 increased, so plus 40,000. In stock it is outflow, it has going out, that is 30,000 minus 30,000. So net effect will be 10,000. 40,000 minus 30,000, net effect is 10,000 in asset side. In capital, this 10,000, that profit is to be added to the capital account. Formerly whatever the figure there is, but the capital to be increased by 10,000 rupees. So left hand side, right hand side, assets and capital, 10,000 equal to 10,000. Let us solve this problem under equation method. Show the accounting equation on the following transactions of Mr. Ravi. So there are four transactions. The first transaction is started business with cash rupees 80,000. So started business with cash means what? Actually asset, cash is an asset, capital it is a liability. So both are increased, cash increased and capital increased. So first of all, what are the heading is given in the question paper, you have to find it out. Accordingly, you have to draw the diagrams. So how many headings you need in the books of Ravi? You can write it first. And then started business with cash means cash on account and then capital on account. So two column we need. And then transaction 2, goods purchased on credit from Kamesh, rupees 10,000. Kamesh is a creditor. So one column for creditor. And then goods purchased means stock increased. So one column for stock we have to prepare. And then furniture purchased for cash. So furniture and cash. Cash already there. So you need not open the cash column. Furniture account you have to prepare. You have to open one column. And then paid creditors. So we have to open for one column for creditors. Creditors, cash. So how many heading? Cash, stock, furniture, capital, creditors. 5 headings. You can draw like this. Assets. Assets equal to capital plus liabilities. Capital plus liabilities or capital plus creditors, both are same. So here the first transaction is started business cash. That means 80,000 is coming inside. That means plus cash increased. At the same time capital it is also a liability. It is also increased 80,000 rupees. So this is a equation method. So equation is here 80,000. Here also plus 80,000. So equal to. You can draw like that. And then next transaction, you can keep it as it is. And then next transaction is goods purchased on credit from Kamesh. That means Kamesh is the creditor. So creditors is increased. Goods purchased means stock is to be increased. So how much stock increased in the credit purchases? So you have to write the credit purchases in the transaction column. And then stock means plus stock, how much? 10,000 rupees stock. And then creditors is also increased. In creditors column 10,000 rupees. It is also increased. Formerly 80,000. According to the previous transaction, there was a balance 80,000 rupees cash. So equation is plus 80,000 and then plus stock 10,000 equal to here liability, the same liability, that is 80,000 plus 10,000. That means 80,000 plus 10,000, 90,000. 80,000 plus 10,000, 90,000. So it is tallied at an equation method. And then as it is, you can keep it. And then purchased furniture for cash rupees 6,000. That means furniture. Furniture means is increased. So furniture increased, one column. Furniture how much increased? So 6,000 rupees plus 6,000 rupees. And then purchased furniture for cash. So cash balance will be reduced. So cash balance minus how much? 6,000 rupees. There is no adjustment in the capital and creditors. So if we balance now, formally 80,000 balance, and then out of that we have spent for furniture 6,000 rupees. So rupees 74,000. Here the same amount 10,000. And then furniture rupees 6,000. So 74, 84 plus 6, 90,000. Here also the same 80,000 plus 80,000 plus 10,000. So 10,000, this is 90,000, this is 90,000. Asset side debits, asset side is 90,000, and then liability side is also 90,000. The final transaction is paid creditors by cash rupees 8,000. That means creditors, already there were creditors for 10,000 rupees. Out of that we paid 8,000 rupees. So creditors reduced. By cash, cash is also reduced. Cash is an asset. So cash you have to minus it. The cash is how much? 8,000 rupees. And then creditors we have to deduct it, the same 8,000 rupees minus 8,000 rupees. So closing balance 74 minus 8,000, that is 66,000. Here the same plus 10,000, there will be no change in stock. And then furniture plus 6,000. So here the capital there is no change, plus 80,000. And then creditors 10,000, out of which we paid 8,000, so balance is 2,000. So 80,000 plus 2,000, 82,000. Here 66,000 plus 10,000, 76,000 plus 6,000, 82,000. So the balance sheet is tallied. So both assets and liabilities are equal. So 82,000 equal to 82,000. So this is a equalization method. Understand?